if we look at the Aussie dollar, you can see now that this is how the sign that we have of the weakness of the Australian. We know that it usually, when it moves, when the currency moves, they move from one structure point to the other, and the structure points or the significant points are decision making points or references where decision is being made where they're going to buy or where they're going to sell. So you see that we had the decline, we had the sell-off, we had big range days going all the way down. It broke the first structure point at 104.39, and then it broke through the second structure point, which is the 103.89, and then all what we had was a bounce back, just a simple bounce back. And even with this bounce back, all what we were able to muster, all the strength that we were able to muster, is to close at the 104.40, and the structure point that we have here is 104.39. I mean, this is, it's one and the same. So if we snap back from a structure point, a significant point, only to come back 30-40 pips, and we have seen the sell-off in the US dollar that came in during the day, that by no means is an indication of strength in the Aussie. All what this means is just a pause. That snapback is just a pause, and we should be looking for continuation to the downside. So based on this, I have a very easy trade. If it goes down one tick, i.e. if it goes down to 104.39, one tick from now, that is my sell signal. So my sell signal is to go short if it goes down basically one tick from where it's at right now. So that is going to be, this is how close we are from having our sell signal. Our buy signal, we can use the 105 now, which is the buy signal that we had, the sell signal which we had from last week. We can use that as a buy signal right now, because we need to make sure, because the high of Friday's high is the 105.26. This significant point is 105.36. So between 105.26 and 105.36 is 10 pips, so it doesn't make a difference. But if it gets above the 105.36, at least I have the confirmation that it was able to clear out, or to clear the Friday's range, and now we can get, we will have an expectation that it might move forward. So with that, my bias, as I said, for the odds is the downside. My sell signal is merely one tick away, which is 104.39. That is practically our sell signal. So what I'm going to do now is I'm going to go to the intraday chart, and I'm going to identify where I'm going to take a sell. If you look here, this is the low of the range on Friday in the UK session. It is the 104.32, which is basically pretty much the 104.39. Look at, it's 104.32, 104.39. It's all around the 104.30. And if you look at this price structure, you have one failure, two failures, three failures. This is primarily your little structure, and that little structure is right at the if I put this, take it to the 104.39, you would see that it's right there, 104.38. It's as close as it gets. This is as good as it gets. So with that said, we are going to short the Aussie on a trade below the 104.38, and let me see from last week. This is our short structure from last week. We were shorting it from 108 last week. So our short point now is going to be 104.32. This is my short point. My structure short is going to be the 103.89. This is my structure short is the 103.89, and I want it to go below that. So my structure short is the 103.89. My buying point, my long point, is going to be the 105.36. And I can use this because there is the lack of real structure. The next structure point is about the 108, so I can use this also as my structure long point. So I can use this as 105.36, and if I go short below the 104.38, the 104.32, which is I'm going to place my stop this is the only place I can see to place the stop. We have to use a big stop for this. I need to place the stop. If this is the minor structure for this decline, I can place my stop right above 104.80, and all of you know the 80-20 rule, so we're going to place the stop above 104.90. Just going to give it 10 pips or 10 ticks above the 104.90. So my short stop is going to be 104.90, and if I'm going to go long above the 105.36, I don't want it to come down below the 105.36. So I'm going to put the 105.36, but you know that you want to give it a few pips to let it come down so that you don't get whipsawed. So this is why it's such an important point. It is the long point, the quasi structure point, and our stop. So I'm going to put the line here, 105.36. That is going to be our buying point. And you need to put these lines on your chart so that at least you know what happens when the price gets above this. And you look here, that is your 105.36. It has also been Friday's high, so that would be a good indication for us to buy it when and if it gets there. And if it does, I don't want it to come down and trade below that. I want it to come above here. And you can see, guys, all of you, that would be actually that trade. If it gets above this, this happens to be the structure point on the upside. So this is a brilliant structural chart. This chart is giving us, it has respected the structure on the downside and is respecting the structure also on the upside. So we should have we should have two structure points on either side. Okay, It's the same. It's the same. It's the same as last time. I didn't change.
When it said no.
No, you do it. You set up the transfer.
Okay.
All right. All right. So you have your structure point, which above the buy point will give you a move to the upside, and you'll have a structure point if you have a trade to the downside. So this is a brilliant structure point, a structure chart on either side for the long side and for the short side. Okay, that is the Aussie dollar. Let me save this recording.